Hello there, welcome to this edition of Global Business Africa. In the next 60 minutes, we'll run through all the business news stories you need to know about from right across the continent and beyond. First, let's start with the run through the markets. We're going to be talking about Africa's biggest single retailer, ShopRite, in just a moment. We'll ask why its share price popped by over 5% today, despite reporting its worst set of half-year numbers in over a decade. But even at those levels, the shares are still 10% in red, at least on a year-to-date basis. In the last 8 weeks, though, out of the 8 indices or so, the indices that we do track here, they're all in positive territory, except for Ghana. The composite index is down there by 1.5%. Biggest gain, though, coming from Egypt. That's up by over 14%. Here's what's coming up next. Africa's largest supermarket group posted its worst first half performance in over a decade. We'll check in on the latest confusion surrounding the UK's Brexit deal as the deadline gets closer. And watch out for these proudly South African handcrafted timepieces hitting the streets of Johannesburg. All right then, company results is our first stop at this hour. Africa's largest supermarket group, that's ShopRite Holdings, says its outlook could improve after its worst first half performance in more than a decade. Now, the chain has been hit by deflation in South Africa and a currency devaluation, a pretty steep one, in Angola, which also happens to be its fourth largest market. South African retailers have struggled to lift earnings at home as high unemployment and household debt have squeezed consumer income completely. So let's dive into the numbers with Angelo Coppola. He joins us now live from Johannesburg tonight with a lot more data on this story. So, Angelo, ShopRite shares up by over 5% in trading at the JSE today, despite the numbers that we saw. Why are investors happy?
Well, it does sound a little counterintuitive, doesn't it, Raman? Bear in mind, though, that that share price has lost more than 10% of its value since January 2019. And the reason it didn't drop any further is that the market knew what was coming. The company's trading updates were very detailed and very specific. They highlighted the problem areas very clearly. And we know that there are 2 areas that were identified, as well as the issue in Angola. Clearly, that issue in Angola is outside of the control of the company. It, as you said, is the fourth largest ShopRite market, and when that country devalued its currency by around 85% against the dollar since the beginning of 2018, it depressed those revenues significantly. Outside of South Africa, the trading loss then was around $4.4 million compared to a trading profit last year of $40 million. So the main issue there is the fact that Angola had a major impact on that trading update and the trading figures that were released today, Raman.
Indeed. So walk us through the logistics problems, because there are several. The group cited as part of the reason for that, for the relatively flat numbers that we did see in South Africa, because the retailer had issues in getting stock where it needed to be, and also with the rollout of this ERP software, I believe that's from SAP, that was also quite problematic. Why?
Well, look, I mean, the analysts did say that although those ShopRite numbers were pretty flat, they are better than their competitors' numbers. And it was also affected by a strike that happened around the distribution hub in South Africa, and that brought the almost the distribution of the entire product line to complete virtual standstill. Coupled with that was that introduction of that IT or that ERP system that you mentioned now. That had a major impact as well, because the installation of the system has been planned for about 4 years now. It's been in the system and they were ready for it, but it had its problems. The company estimates that it lost around $70 million due to stock unavailability across all of its businesses. And they had at that point already loaded some 50% of all the stock items onto the system when things went awry. As you know, when you implement a new IT system, nothing goes right all the time, and there were hitches here, and they did impact, and it has been a very valuable and expensive lesson for the group to learn, Raman.
Indeed. So other than Angola, operations, as you mentioned, outside South Africa, losing about $4.5 million in the first half of the year. But moving forward, is that likely to change in the medium term?
Well, look, I mean, the company has to be upbeat because they've got to say that things are going to look up in the second half of the year. They did say that the first half isn't indicative of the business strength or weakness as it currently stands. That currency issue in Angola is likely to subside a little. Those revenues will rebound there. It is a $7 billion market cap company. It's got distribution hubs in 15 countries. It's got businesses in 14 countries. And the South African business, though, still accounts for around 74% of sales. So whatever happens here in terms of consumer spend impacts the business at the bottom line straight away. We know that inflation numbers in South Africa have come down to around 4% in the last data read that we heard a couple of weeks ago, so that's good news. The December sales figures, I'm told, are trending in the right direction, and they've trended like that into January, which is also another piece of good news. The plan is to open, and I'm told, 100 local stores, that's 100 stores in South Africa, and some 30 stores outside of South Africa. So they are putting their money where their mouth is, and they expect to be ready to supply into more countries in Africa and in other parts of the world, Ramah.
Indeed, and of course they did open a branch here in Kenya as well not too long ago, so let's see how that does play out. But one last question for you, Angelo. The retailer also is in talks with its biggest shareholder, Christovisa, to apparently try and remove his extra voting rights that he holds through his investment vehicle, Tibo Financial Services. But looking at it from Visa's perspective, why would he agree to such an arrangement, and if he does, at what cost?
Well, look, the market liked that news as well. Some analysts are suggesting that the bounce that we saw in the share price, that at one point was 7.1% up on yesterday's trading figures, is because of this discussion that's happening between Shoprite and Visa. And he holds some 32% of the voting stock there. So they're looking to simplify this share structure. It's understood that Shoprite will buy back all of the deferred shares that are held by Visa through that T-Bolt structure that he has. 32% is a huge number, and that's only in voting rights. But what hasn't been discerned yet or agreed to is the economic value or right of those shares. Analysts are saying it's hard to put a value on those shares, but they're also watching how that transaction is going to happen, if it's a buyback or whether it's going to be a rights issue using the company resources. So this one hasn't played out to its full extent yet, but it's likely that Vista is not going to walk away without getting exactly what he's after. Ramah.
Indeed, it's going to be an interesting plan to watch. We'll leave it there for the time being. Angela Kopler in Johannesburg, South Africa. Thank you very much. Now, we're still in Africa's most industrialized economy. The labor market over there continues to create relatively high unemployment levels for young people across the country. The current unemployment rate for the youth is 38.2%. That's an eye-watering number. Most experts believe there should also be a shift in mindset, though, from a majority of young people who attempt to get into the labour market. CGTN's Travis Andrews filed this report.
They took to the streets to let their voices be heard. Students wanted free higher education for all. But graduate unemployment in South Africa remains seriously high. Graduate unemployment currently sits at 33.5% for those aged between 15 and 24, and 10.2% amongst the ages of 25 to 34, which means there's not enough jobs in the market, even for educated youth.
One of the biggest problems with our education system at the moment, and I think globally, is that we're still training young people for the world of work, for them to go and seek jobs rather than create jobs and create enterprises. So yes, there is definitely a need to change the way in which we teach, and the need to focus more into artisanal kind of interventions where young people can learn to really go out there and really create new enterprises that will really see us into the future.
Most agree there is a shortage of artisans in the country, which are skills that are one of the bedrocks that underpin the economy, including the green economy. Cape Town's youth are already showing an appreciation for creating their own opportunities, be it in tech startups or the green space. This is where the new opportunities for job creation actually lie.
The green economy is a new and emerging sector, and there's a lot of new innovative ideas that are needed to really catalyze action in that particular space. And what I've observed is that young people have got the energy, they've got the imagination to really come up with solutions that can be applied, that are future-proofed and can withstand the test of time. So we really require that particular involvement.
The green tech sector will increasingly become a player in job creation as the Western Cape begins to position itself as the industry's hub, which is already drawing in foreign direct investment. The Western Cape government is attempting to develop the economy for the future and want to create 50,000 jobs every year through a skills development program.
There is a massive demand for qualified artisans. Now, you know, the maths and science skills along the West Coast have been incredibly poor for a number of years. So the government has had to take a focused intervention into that space to try and bring up the artisans that we actually need. And I think it's around about 14,000 artisans are needed in the Western Cape going forward. We as government have to make sure that we do an intervention into creating as many artisans as possible.
The country's future, though, begins at schools around the country, where the most important intervention is needed, and where artisanal training and development should increasingly play a more important role as South Africa's real job creators. Travis Andrews, CGTN, Cape Town.
Right, then a quick run through some company news now. South Africa's state-run asset manager, PIC, has been ordered to recover the $310 million it invested in AEO Technology Solutions in late 2017. The investment by Africa's largest single asset manager has been interrogated quite a bit in the ongoing Judicial Commission of Inquiry into the entity. PIC is expected to recover any interest that may have accrued on that amount within 6 months. South Africa's largest mobile operator, Vodacom, is also planning to charge consumers, apparently, for rolling over expiring and unused data plans. That comes after the country's Independent Communications Authority introduced new data expiry rules. The new regulations are set to come into effect by the end of this week. The French car company, the PSA Group, has announced plans to re-enter North America with the Peugeot brand. The move will help it lessen its dependence, really, on Europe, which right now accounts for about 80% of its entire sales. PSA is set to start shipping vehicles into North America by 2026. And finally, the shares of the American automotive company Tesla fell after the U.S. financial regulator asked a judge in New York to hold the company boss, Elon Musk, in contempt for violating its settlement deal. Now, the move by the Securities and Exchange Commission comes after Musk tweeted about the car firm's production plans. That's a run through your company headlines. We're 12 minutes into the out. Time for another break. Here's what's coming up next. Vote counting continues in Nigeria with President Muhammadu Buhari in the lead. And Egypt is ready to launch its power-sharing project with Sudan. Details on that and plenty more coming up.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business. Only on CGTN.
Africa Live. Find your voice.
Every story starts out like this.
Okay. We'll head up now.
Beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sumitra Naidu. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN. See the difference.
Africa is the nexus of enterprise, and global business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back to the program. You're watching Global Business Africa. Now, Nigeria is quite the focus for us right across the board here on the program for one very simple reason. The country, of course, has been carrying out its election for quite a while now. Now, President Muhammadu Buhari, according to the latest data we're getting, is still in the lead in a range of states. The main opposition party, the PDP, has essentially rejected the results tallied by the Nigerian Electoral Commission. Now, various observers say that the election is an improvement compared to prior ones that have been held in Africa's largest country. But at the same time, let's get the latest details. Here's Elisha Mekalam with more.
The 2019 election has been described as the most competitive in Nigeria's politics. 91 political parties and 73 presidential candidates participated in it, although only 2 political parties were dominant. President Muhammadu Buhari and his closest rival, former Vice President Atiku Abubakar. Results now being tallied by the Electoral Commission show President Buhari is leading in 7 states, while the main opposition candidate, Atiku Abubakar, secured wins in 4 states. Although election observers said operational shortcomings severely affected voter participation in the elections, most of them say there was competitive environment for contestants.
On the campaign environment, overall it was competitive and contestants were able to campaign with freedoms of assembly, expression and movement broadly respected in the country. Unfortunately, however, there were increasing instances of intimidation and violence during the campaign, and particularly in the week after the original election date.
The scenes of violent attacks on polling stations like this one surfaced on social media. Civil society groups have said as many as 39 people were killed on polling day.
Violence has no place in a modern democracy. Nigeria can do better. Violence has no place in a modern democracy. Those responsible should be held accountable. We encourage all political parties to honor their commitments in the National Peace Accord and reject violence.
Results from more than 20 states are still being expected, and some of those unannounced states could swing the outcome of the elections in favor of either candidates. Kelechi Emekalam, CGTN Abuja, Nigeria.
All right, then, quite a few interesting things coming out of Nigeria. So let's get you the latest developments here on essentially a fast-moving story. Deji Badmus now joins us live from Lagos. Right, so Deji, bring us up to speed with the latest results. Over 20 states, I believe, have provided their numbers. What's coming out?
Well, Ramah, let me just quickly give you an update now on what Kelechi reported there in her piece. 28 states, of course, as you just said, 28 states have actually reported now, and Buhari has won 16 states, and Atiku has won 12. So we still have about 28 states, meaning we still have around 8 states more to go. And things are actually speeding up now as a result of the fact that the returning officers, that's the polling officials now, have all come to Abuja, to the National Collation Center. So that's why things are moving a bit fast. What I think is going to happen is that there's a chance that, well, maybe by midnight today or early morning tomorrow, we might have the final announcement from INEC. But we just have to wait and see how that goes. But so far, 28 states, results have been announced, and Buhari has won 16, and Atiku has won 12. So obviously Buhari is still leading, and it's looking likely that he would win this.
Right then. So with the data that I'm seeing here, at least with 9 states left to be counted, you've got data that I don't on this end. Buhari had 12 million votes compared to 8.5 million for Atiku Abubakar. But are there any other large states at this point that are yet to file that might mathematically swing this back into Atiku Abubakar's favour?
Not at all. Not at all, Rama. The states, the 2 big states that people had been expecting was Kano State, and Kano State has actually been reported not quite long ago, just before we came on air, and President Buhari won that state, getting 1,464,768 votes to Atiku's 391,593. Another important state that everyone had been looking out to see how the result would go there has also been announced, and that's the state of Katsina. I mean, these are huge, catchment areas now for vote. President Buhari has also won Katsina. That's his state, and he's won it by over 1 million votes. And Atiku Abubakar getting just around 388,000 votes. So now, other than those states, there's no others. Lagos has been announced. Of course, we saw that result quite poor. And but other than those states now, you don't have any other states now that we're actually expecting that has this huge number of votes that could swing the election now in favor of either candidate. So the way things are, I would say it's becoming pretty clear now, I mean, who has won this election.
All right. Of course, just to go back to that Lagos number, the margin was 53-41 in Buhari's favour, and some pretty interesting results coming out of Lagos, given its commercial heft. But as you mentioned, PDP, the opposition, they've already come out and said they don't accept these results. To quote the party chair, the results are incorrect and unacceptable. But they haven't provided any evidence yet, have they, to actually back up their claims?
Well, they haven't provided any evidence yet, and in fact, this is not the stage when they would need to provide that evidence. They've just lodged their complaints. Usually the law says you can't present any evidence during the collation of the results. You have to wait until after the results have been announced, so they will just have to head to court, and it's at the court now that they would have to present their evidence. But they've actually not said they're going to head to court, but it's looking likely that this might go to the court. So it's actually at that stage now that they will begin to present any evidence at all, if they have.
Indeed. So one last question for you, Deji. At this point in time, we've got roughly, if my math is off, about 20.5 million votes that have been counted. Do we have any estimates on what voter turnout was like, given that there were about 73 million eligible voters in this election?
Rama, what I can tell you is that from what I have seen, I mean, we've practically seen all the results, and from basically all the states. What we're just waiting for is for INEC to make the official pronouncement. But from what I've seen, turnout in this election, nothing impressive at all. There's a chance that at the end of the day, when all the results are in and INEC does its calculation, there's a great chance that the number now, I'm talking about turnout, may not be up to what we saw in 2015. And in 2015, turnout was put at around 43.65%. There's a chance that we may not get to 43.65%. It might just be around that region. To be candid, turnout has not been impressive. And a clear example is the case of Lagos, where you have close to 6 million registered voters, and about 4-point-something million actually collected their their permanent voter cards. But at the end of the day, the number that actually came out on election day to vote, less than 1 million. So, and that's what we've seen across board in the southeast of the country, the south of the country. In fact, the only place you would say, well, the voter turnout seems to be large, but still doesn't measure up to what we saw in 2015, that would be in the north of the country. And it's understandable because both front runners are from the north. But to be candid, from what I have seen so far, turnout in this election, not been impressive.
Indeed, and that might just be the thing that swings it, isn't it? We'll leave it there for the time being. Thank you very much for the update. That's Deji Badmus there live in Lagos. We'll, of course, keep you updated with the latest developments from Nigeria as and when they do come in. Now, it's been nearly a week since Zimbabwe started using the new RTGS dollar, if you will. It was announced through a monetary policy statement last week that basically unpegged the bond note and the electronic bank balances from parity with the US dollar. CGTN's Ramah Nyang has the details.
The local unit has held steady its 2.5 to 1 US dollar rate since it began trading on an interbank foreign exchange market last Friday. The move to do away with a fixed 1-to-1 rate between bond notes and electronic bank balances and the US dollar was long overdue, given that the prices of most goods and services were being pegged at a black market rate of up to 4-to-1.
The business community, in particular exporters, like this because, of course, before, if you had 100,000 US dollars in the bank and you wanted to sell it, you would get 100,000 RTGS. Okay, before. Now, of course, you sell 100,000 at the moment, whatever the current rate is 2.5, you're going to get 250,000 instead of 100. So importers, they can buy their currency at those rates and then price their goods and services at real prices, not based on what was effectively the exchange rate being set by the street. You cannot have a country where your exchange rate is set by parallel market dealers on the corner of a street.
Rates on the parallel market have begun retreating in the wake of the currency reforms and are expected to drop even further.
But there's been some head scratching for some ordinary Zimbabweans trying to get to grips with the new monetary dispensation, in particular understanding just what RTGS dollars are.
The individual, the normal Zimbabwean person in the street, nothing has changed. You still have your RTGS in your bank account. You still have your mobile money transactions. Nothing has changed, whatever you call it, RTGS dollar or not. Okay. Basically, all they've had to do is they've had to try and use a medium to delink the two. Before, remember, it was RTGS dollar, RTGS and bonds were 1-to-1 to the US. So to make them no longer 1-to-1 to the US, you have to delink them.
The RTGS dollar is now part of a basket of currencies in use here, including US dollars, the South African rand and the Chinese yuan. The central bank has ruled out any price increases, which should give comfort to a market that is weary of losses given the country's problematic financial history, which has seen the collapse of its own currency in 2009 and a series of bank failures. Ramah Nyang, CGTN, Harare, Zimbabwe.
Let's head up north now. Egypt says its electricity sharing project with Sudan, her neighbour to the south, is now ready. A deal was signed between the two countries 2 years ago. Since then, infrastructure has been improved and built to pave the way for this new power sharing endeavour. CGTN's Yasser Hakim has the details.
It's been a year in the making. Once Sudan is ready, Egypt plans to export about 40 megawatts of electricity as a testing period at the end of the month. The project is on 2 phases. Egypt would supply Sudan with 300 megawatts in the first phase this year and up to 3,000 megawatts starting 2020.
We have large reserves of electricity in our grid, and one of the main aspects to benefit from it is through exporting to become a regional energy hub in Africa on one side and Europe on the other. This project will help in the economic development of Sudan and other African countries which suffer from a shortage of energy.
Egypt has constructed 300 electricity towers over 100 kilometers to supply electricity to its neighbor. The project costs about $75 million. Egypt will sell electricity at the subsidized local market price of about 5 cents per kilowatt hour. But Cairo is willing not to receive cash payments from its southern neighbor.
Sudan has multiple economic issues, including high unemployment and low investment rates. Sudan prefers to export products such as livestock and agricultural goods instead of cash payments to Egypt in return for energy. Egypt has agreed to this formula and is willing to do the same with any other African nation that wants to invest with Egypt.
The government hopes this project will be the link to power sharing with other African countries, as Chad, Eritrea and South Sudan are next in line. Egypt is trying to make optimum use of the surplus in its electricity production. Similar power-sharing projects are in the pipeline with Saudi Arabia, Jordan and Cyprus. Yas Hakim for CGTN, Cairo.
It's 18:30 GMT. You're watching Global Business Africa. Time for a break. Here's what's coming up next. There's a bit more confusion surrounding Theresa May's Brexit deal as the deadline to leave the EU comes closer. And we'll look at some of the progress in trade talks between China and the United States.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Accra is my kind of city. That's because when I'm here, I feel like I'm back home in Lagos or Abidjan, which are two of the major cities I grew up in.
Business in Africa is high risk.
After about a decade covering business news on the continent, I've learned it's all about the high risk, but also the high returns and the high energy. You simply have to adjust in order to keep pace. When I started out as a journalist, my dream was to open people's minds to the different perspectives. From the CEO in the boardroom to the trader out in the street, we all have different stories. From Accra to Addis Ababa, from Cairo to Cape Town. And I wouldn't have it any other way. Here at CGTN, we realize that Africa is on the move, and it's moving fast, but we're moving right along with it. I'm Uche Okoronkwo, and I'm a business anchor and reporter at CGTN.
Welcome back to the programme. Let's get the latest now on Brexit. The British Prime Minister Theresa May has offered lawmakers a chance to vote to delay the UK's exit from the EU if her deal is voted down in March. Mrs May announced the shift in strategy as the UK stares down an important deadline. The possibility of a Brexit delay would offer a way to minimise the potentially chaotic effects of leaving the EU without having a deal in place, as the UK's negotiations so far have failed to produce a breakthrough agreement. The UK has less than 5 weeks before its scheduled exit from the European Union.
Let me be clear. I do not want to see Article 50 extended. Our absolute focus should be on working to get a deal and leaving on the 29th of March. An extension beyond the end of June would mean the UK taking part in the European Parliament elections. What kind of message would that send to the more than 17 million people who voted to leave the EU nearly 3 years ago now? And the House should be clear that a short extension, not beyond the end of June, would almost certainly have to be a one-off. If we had not taken part in the European Parliament elections, it would be extremely difficult to extend again. So it would create a much sharper cliff edge in a few months' time.
The UK's Prime Minister Theresa May there. So let's get the latest on this. Richard Bestick has been following developments in Parliament. He joins us now live from London. Richard, in offering MPs an option, so to speak, to extend Article 50, isn't the Prime Minister essentially just kicking the can down the road? Because what can be accomplished in 3 months that hasn't been done in the last 2 years?
I think the sound of clattering cans going down roads is getting ever louder, isn't it, Ramah? Yes, there is an element of that. In a way, nothing has changed and everything has changed. Yesterday, in Sharm el-Sheikh, the Prime Minister was questioned on this very issue. Surely she can't believe that it would be possible by the 29th of March to get everything ready for Britain to leave the European Union. And she said she wouldn't even countenance talking about it. She insisted that she would continue. Here we have today a completely different situation. What is a tactical retreat after a reported 12 to 20 ministers threatened to walk out unless she extended, unless she stopped the clock on Brexit. And she's done that by saying on the 12th of March, possibly, there will be a vote on her deal. The likelihood is that that might not get through. So the next day there will be a vote on no deal. That's very unlikely to get through. And then on the third day, the 14th, there will be a vote on extending the Article 50 of the Lisbon Treaty, which is the mechanism by which Britain will finally leave the European Union. Now, if that is passed, then we have a situation where we've got to ask, how is that time going to be used? As you heard the Prime Minister saying she hasn't changed her mind. She has been frog-marched, if you like, into a position of making this tactical retreat. And there's one more thing, Ramah. Actually, she can make it to her advantage, because tomorrow in the British Parliament there was going to be an amendment to a neutral motion being tabled by the government. They would have said, look, Theresa May, we will accept your deal if you then put it to the people in a second referendum or ask them if they want to remain inside. Well, she shot that fox, and that took a lot of putting together. Putting it back together again in 2 or 3 months' time is going to prove very, very difficult. So a tactical retreat by the Prime Minister, but something that she has taken advantage of, if you like, Ramah.
Indeed. So, as you said, everything has changed and nothing has changed. The leader of the Labour Party, Jeremy Corbyn, he says even if MPs do approve of Mrs May's deal, it has to be put to what he described as a confirmatory public vote. But this is the same Mr Corbyn who was against a second referendum for months. So why effectively is he changing course now?
Well, very similar circumstances. He has been forced. Last week he had 9 resignations from his parliamentary ranks as 9 members of parliament quit the party and went to sit as independents. And there were a number of others who were going to follow if he was going to resist what is, after all, opposition Labour Party policy, that failing getting a general election, they would then say to the government, well, you need to have a referendum. He is now in a situation where he has to do that, and so he has done it, albeit reluctantly. It's got to be said, though, it might not be that easy to get the mechanism inside Parliament to return to a situation where a second referendum could be held. But certainly Labour is now on track. Jeremy Corbyn, the opposition Labour leader, who hasn't just spent a few months saying he's against the European Union, he's a lifelong opponent of the European Union, going back over 30 years on the backbenches before he suddenly became leader of the Labour Party in Britain. So he's got a long-standing problem with the European Union. He has been brought to this situation at the very last minute, against his will, some are saying.
Indeed. One last question for you, Richard. So far, the EU hasn't budged on its offer, particularly with regards to the Irish backstop, and neither has the bloc splintered in its position despite the PM's threat of a messy exit. At this point, are there any other cards for Mrs May left to play?
Well, the card that the Prime Minister, the UK Prime Minister, has been playing so far is that if you don't agree to reopen these negotiations that we settled after 2 years of talks, we'll do something very harmful to the British economy. Now, that clearly hasn't worked in Brussels. We do have a situation whereby they are now going to be asking themselves in Brussels, well, they look like they're going for an extension of Article 50, in other words, stopping the clock on Brexit for at least 2 or perhaps 3 months. But what are they going to do with that time? And although the Brussels has always said, yes, for electoral purposes, a general election, a second referendum, we would agree to stop the clock. If it's just for more talking and those cans being kicked down the road, Ramah, well, maybe they'll have a different thought. They will be asking very hard, what are you going to use this time for? At the moment, we have a situation where Geoffrey Cox, the Attorney General, the government's lawyer, spent the afternoon poring over the detail of the agreement, the Brexit agreement between Brussels and the UK. He came out saying nothing at all. So no apparent change in the attitude of Brussels towards Brexit, but there will be a few hard questions coming from Brussels for Britain to explain how you're going to be using this extended timeline.
Indeed, it was the best of times, it was the worst of times. We'll leave it there for the time being. Richard Bestick, live in London. Thank you. Now, both Beijing and Washington are hailing what they describe as substantial progress on trade talks designed to ease tensions between the two parties. CGTN's Jim Spellman has more details from Washington, D.C. on where things are likely to go from here.
We're seeing positive signs from both sides that a trade deal could be completed soon. The Chinese delegation, led by Vice Premier and Special Envoy Liu He, was set to return home Friday after 2 days of negotiations, but talks were seen as productive by both sides, and the delegation remained in Washington through Sunday. President Trump now says it is more likely than not that a deal will happen, and hints a final agreement could come together in the next week or two.
It's really been terrific. I tell you, that whole relationship has been outstanding. We put ourselves into a position of strength for the first time in about 35 years, or probably a lot more than that. But China has been terrific. We want to make a deal that's great for both countries, and that's really what we're going to be doing.
According to the Xinhua news agency, the Chinese delegation says the two sides, quote, have achieved substantial progress on specific issues following their latest round of high-level economic and trade talks in Washington. Negotiators were up against a March 1st deadline. That's when U.S. tariffs on $200 billion worth of Chinese goods were set to rise from 10% to 25%. But on Sunday night, Trump tweeted this, quote, as a result of these very productive talks, I will be delaying the U.S. increase in tariffs now scheduled for March 1. Assuming both sides make additional progress, we will be planning a summit for President Xi and myself at Mar-a-Lago to conclude an agreement. No confirmation from Beijing about whether a meeting between Trump and Xi will take place. Trump did not announce new deadlines for tariffs to go up. Xinhua reports that the Chinese delegation says progress was made on such specific issues as technology transfer, protection of intellectual property rights, non-tariff barriers, the service industry, agriculture, and currency exchange rates. The U.S. side has been focused on including an enforcement mechanism in any agreement. It's not clear if any progress was made on that issue. Jim Spellman, CGTN, Washington.
The thing is, though, uncertainty over a deal, especially its timing, the details and its implementation, that's leaving businesses on both sides of the Pacific very, very concerned about the future. CGTN's Dan Williams, for example, filed this report from the U.S. state of Michigan.
A busy afternoon on the Fuyao production line. The world's largest automotive glass manufacturer moved into this warehouse in Plymouth, Michigan, about 40 kilometers from Detroit, back in 2017. The Chinese company is now eyeing further expansion. This is just a small part of the $4 billion invested by some of the more than 300 Chinese companies in the state.
What we focused on is becoming one team in one direction.
working with each other and understanding that there's going to be learning curves. There's going to be an understanding of how it's done in America and how it's done in China. We complement each other so well because no one has all the answers. Collectively, we have all the answers.
Those close business ties were emphasized at this past weekend's Detroit Chinese Business Association New Year event.
This gala dinner is a celebration of the business that's being developed between China and Michigan over the years. But that relationship has been put to the test in recent years, following the trade dispute between the US and China.
Scanny Kai is the Vice President of Strategic Planning at BMTS Technology, a Chinese company that manufactures turbochargers. He's hopeful the trade dispute will be resolved soon and bring certainty to the auto industry.
I think the challenge is for our supply chain, because for turbocharger you have to deal with like 60 to 70 components, and these components are from everywhere. For car we talk about 5,000, minimum 5,000 components. So I think there's if there's a kind of a mutual benefit trade agreement being reached, I think that's really positive for all the players in the value chain.
The optimism is echoed by Jeff Mason, President and CEO of Michigan's Economic Development Corporation.
What we try to do in Michigan is really look at the long view, you know, and what might happen this year or last year or next year. You know, we are in this for the long haul. And we're about building economies for decades, centuries. You know, we're going to continue those relationships and continue to build upon them. And we hope that, you know, in 2019, maybe we can approach $5 billion worth of investment from China into Michigan.
Michigan is far away from the high-level trade talks in Washington, but business leaders here know the supply chains are intertwined, and a lot is riding on what happens between China and the US in the coming months. Dan Williams, CGTN, Rochester, Michigan.
5G technologies taking center stage at this year's edition of Mobile World Congress in Barcelona. But we hear lots about 5G, but what changes will this actually provide to you? Take a look.
2019 is often regarded as the launch year for 5G's commercial use. The fifth generation network promises faster speeds and lower latency. Many smartphone makers are unveiling their first 5G handsets at the ongoing Mobile World Congress in Barcelona. China plans a trial commercial use of 5G this year and will issue 5G licenses to companies in 2020. As of 2018, 180 operators had deployed 5G networks in over 70 countries. Compared with 4G, 5G allows a dramatic increase in the speed of data transfers. 4G allows a theoretical top speed of 1 gigabit per second. 5G networks are set to permit 10 times that. Another improvement is lower latency. How long it takes between you clicking a link and the network responding. That lag time can last around 20 milliseconds with current networks, but latency on 5G is 20 times less, about the time it takes for the flash to go off on a modern camera. Plus, 5G networks are designed to connect a far greater number of devices. It's likely to provide a building block in a fast emerging Internet of Things. At the Mobile World Congress, many exhibitors are demonstrating live broadcasts and gaming using 5G.
For this game, a server in Amsterdam is doing the calculation. Through our 5G equipment, the data is transmitted to this device. You feel no latency in operation.
Apart from enabling faster mobile phone services, the technology can also help upgrade industries.
Our society can be smarter and more digitalized with technology. We have teamed up with operators to serve car manufacturers and the factories for a wider digital connection.
5G can also work in areas like driverless cars and remote control surgery. It will change our lives in a big way.
With 5G, our facial recognition technology can help find missing children. Our lives will be changed for good.
According to Global System for Mobile Communications Association, 5G will cover 15% of global mobile networks by 2025. In China and Europe, the ratio could be as high as 30%. Song Yaotian, CGTN.
All right, then a quick run through commodity prices before the next break in the program. So Nigeria apparently has ordered oil firms over there to pay about $20 billion that it says is owed to local states in back taxes. Now, one of Shell's officials in charge of upstream activities told Reuters that that relates to a disputed clause in production sharing contracts. But in the firm's view, the tax claim, quote, has no merit. Among the factors that basically suggest that Shell will not be making any final investment decision in the Bongo Southwest offshore field, at least not in 2019. Here's what's coming up next. Watch out for these proudly South African handcrafted timepieces on the streets of Johannesburg. And Sahel leaders are launching a significant climate investment plan. We'll take a look at that and plenty more when we come back.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
Welcome back. In South Africa, 3 Joburg-based entrepreneurs have joined forces in a collective called Homegrown Shandies. Together, they're producing unique, locally handcrafted pieces. Here's CGTN's Julie Shai with more on grassroots tonight.
The Homegrown Shandies collective in Newtown Junction, Johannesburg, is unassuming to the outside world, but in this small stall, proudly South African handcrafted products are sold.
My name is Sianda. I'm the co-founder of Pex Lifestyle. I'm 25-year-old South African entrepreneur. So basically what we do clothing from an iconic rag that celebrates our people. We are celebrating the women who gave birth to us. So the material that you see currently that I'm wearing, the material that symbolizes respect to the people that gave birth to us.
I make timepieces, watches, which are handmade, taken from the culture of South Africa. You can put your own pictures onto it. You can write your own messages. So we just do some unique and engraved watches. I believe that this is the first South African watch which Africans really relate with. We are pushing African stuff here. We are making handmade stuff which date back from our own histories.
I'm with the Mama Kia shoe brand. Basically, we craft these shoes, hand-woven shoes. Just like our catchphrase, it's hand-woven with love and passion. Basically, our products, we're complementing each other, because now Lufuno is creating timepieces that represent our African culture to be. They are authentic, same as Pex Lifestyle. And after all, the colors also complement each other. That's why our customers, when they come in, they can't even tell that it's different brands. We become one. So that's how we came to work together and say, let's make something that will complement one another, but at the same time, pushing each other to grow in this market.
By cutting costs, business is slowly growing, and they're planning to take their collective for a walk beyond Johannesburg.
We want to be more accessible, because currently the challenges that we face is more access to market. And hence we joined forces with like, okay, we can drop the rent money, and the money that I was going to use alone through rent here, we can open another store, maybe in Cape Town or in Durban, just to create those access points for our people.
And I've realized that we is better than I, you know. But now we start to come as collective when they are in collective. So where we are in collective, we are able to raise more money to target more challenges that we have.
They're young, smart, creative, and together they're restoring faith in proudly South African handcrafted products. Julie Shire, CGTN, Johannesburg, South Africa.
On to Niger now, where heads of state from the Sahel region have met in the capital Niamey to validate a climate investment plan that will cover the strip from the Atlantic Ocean all the way down to the Horn of Africa. Here's CGTN's Terry Wangari with the details.
The climate investment plan for the Sahel region should be implemented over a period of 10 years. This is the official decision of the heads of state and government of the Sahelian Strip. The leaders are from Niger, Chad, Burkina Faso, Mali, Guinea, and a dozen other countries. This program, which focuses on 6 major projects, should help tackle drought, desertification, water scarcity, and poverty.
Désireux de conjuguer leurs efforts en vue de lutter efficacement.
Eager to combine their efforts to efficiently combat climate change and its adverse effects on African populations in general, and the Sahel region in particular, the heads of state and government noted the ambitious nature of the Climate Pact. Given its overall estimated cost of $392,709 billion, they expressed a strong commitment to working together for its successful implementation.
The Sahel region is a 10 million meter squared area extending from the Atlantic Ocean to the Horn of Africa, and it is this area that is subject to the very high climate variability. We all remember the severe droughts that occurred in this region in the early 1970s and 1980s. We also know that the decline of Lake Chad, whose current area is only 10% of that of the 1960s, is an anthropogenic factor that also has a serious impact on the river network.
Pending funding for the climate investment plan, Sahel countries